Hi, it's Kerry Artag with Wicked Stocks bringing you the daily Apple report for Monday, December 19th, 2022. Before I jump into the charts like this one, I'd like you to click like if you would. Each and every time you watch the daily Apple report, it helps us a great deal in being found on YouTube by others who are looking for Apple analysis. And that is also true for the daily Tesla report. If you'd subscribe to the Wicked Stocks YouTube channel, you'll be provided notification each and every time new content has been uploaded. That includes the daily Apple and daily Tesla report. And starting in January, the daily NVIDIA report will start. So, where to begin? 147.53 is a new speed line, believe it or not. You know, last Friday we took out the 134.37 low. And when you do that, you construct new speed lines projected off that August high. And we were using a descending two-thirds speed line. It's hard to explain. I suppose I could diagram it out, but it is a new trend-defining speed line that is very close to the old one. And every time we put out a new low, by the way, and if we take out Friday's low of 133.73, then we reconstruct the speed line. It's trend defining. It is our ceiling, really, into January trade, and below which, still anticipating the 123.43 long-term support area. So you can see two meaningful levels here, meaningful for the day, not in the overall scheme of things, because I'm still expecting 123.43 below 147.53. And we had a secondary sell signal last week that I'll get to in a moment, below 137.68. But 134.37 you can see in the support resistance, intraday soft intraday pivot point, 129.04 also soft intraday pivot point. So if we break or open below 134.37, you should allow 129.04 on an intraday basis. That may be it for the day. That would be an appreciable sell-off as it is. But really, it's 127.08, the start of a zone, and I can show that. I'm looking for the best chart because I have it a couple places. 127.08 is a descending channel top that is based in part on last week's Tuesday's high. 127.04 dropping. By the middle of January, it coincides entirely with the 123.43 long-term channel bottom. This channel bottom is long-term support, able to contain selling through Q1 and even into later 23. I've been showing that on the weekly chart. This is a weekly bar chart. 123.31 is backed up by a rising two-thirds speed line that is projected off this meaningful March 2020 COVID low. So this zone, 119.81 to 123.31, and I'm assuming it'll be tested between now and the end of January, quite possibly much sooner, able to contain selling through Q1 and even later 23. Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. So 137.68 is shown here. I'm going to open the daily chart up a bit. 137.68, that channel bottom we settled below on Thursday, setting off a secondary sell signal that should yield 127.08 over the next week or two. So yes, that long-term support area at 123.43 is actually in reach now over the next 2 or 3 weeks, below 137.68. It's a big picture objective anyway, say by the end of January, below 147.53 that I showed a moment ago. All these minor points have been carefully chosen, by the way, 136.02 all the way down to 128.13. Of the 5 of them, it is 129.04 and 134.37 that has the most meaning, the most tradable. It is this double bottom here. Now, I had mentioned how I don't expect the double bottom to hold on the next attempt. I'm not expecting a triple bottom down here. We did take it out just a bit, but we closed just above it. And so, you know, it remains to be seen whether we have a triple bottom down here, but I doubt it. Let's put it this way. If we close today above 137.68, I think we have a triple bottom at least through the rest of January, because if we close today above 137.68, we should rally back up to that 147.53 long-term speed line by the end of next week or sooner. So 137.68 is a meaningful pivot point, you know, into in through the rest of December, holding below this structure shown here, will keep 123.43 in reach as a 2 to 3 week downside target. That I'm still expecting. And if we close above 137.68, then 147.53 in reach. Pushing or opening today above 137.68 does allow 141.85 on an intraday basis. And once again, closing today above 137.68 reverses short-term momentum, 147.53 then expected within probably 3 to 5 days, where we can top out into possibly through January and holding below 147.53, still anticipating 123.43 by the end of January. Now, we're not going to see it today. I don't think we're going to see it this week, but by the end of next week, if we close above this 147.53 speed line, we should see 157.52 within a week or two of that. And that is, sorry, this should be 157 even, not 157.52. I'm just going to leave it alone because it's very close anyway. Closing above 147.53, we push into the 157 handle within a full week of trade, where we can top out on a monthly basis. And as I've been saying, it's holding below 147.53 that maintains a 123.43 target by the end of January. And not unless we close above 157 even do I see a meaningful buy signal into even through January. Under that scenario, by the end of February, we should reach the upper 170s, low 180s. But we are a long way from that right now. We remain heavy below 137.68 this week. The 123.43 longer term target now in reach over the next 2 or 3 weeks. And I think that pretty much rounds it out for Monday's Daily Apple Report. I'll be back tomorrow again with Tuesdays. You have a great day.